Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A lower but indecisive spinning top on Friday, with the lowest close since the end of April. The market is back within the bright red breached but repaired now upper time, currently at 107.37, of the late December 2023 to early March 2024 bearish shift pitch hawk, and below the congestion, a little higher up, of all the moving averages in a tight band between 107.62 to 107.94. Overall, the market is still outside and below the mid-April to late June ascending expanding wedge pattern. This ascending wedge pattern is quite interesting as it attempted being a transition pattern for a move up and out of the bright red bearish shift pitch hawk, but ended up getting sucked into the main pattern instead. Admittedly, the downside primary target for a break lower out of the wedge pattern, well, that's already been achieved, and it leaves a much harder secondary target X below, down at 106 even. Personally, I've had strong doubts about achieving that level, but late last week's actions have soothed my doubts somewhat. So far today, a lower open, but a reactionary move back up through the April 2020 low, but seemingly limited by the overhead bright red lower time. I do note that apart from the last 2 weeks lows at 106.68 and 106.66, we don't have that much below until the low of 2020 at 106.36. Cable, aka sterling against the US dollar. A lower but indecisive spinning top on Friday after the previous session's bearish engulfing pattern. It was the lowest low and low close since mid-May and pierced but did not close under the mauve highlighted flatlining medium moving average, currently 126.39. Further down we have the short medium moving average, currently 126.16, which stopped the decline, and the 50% Fibonacci line of the July to October 2023 move at 125.90. Meanwhile, overhead, we have the important combination of the 50% Fibonacci line of the June 2016 to September 2022 move and the September 2020 low, both at 126.99. Overall, late 2 weeks ago, prices broke down and out from the dark blue highlighted April to early June bull channel. Now, I had thought of looking at this pattern as an ascending wedge pattern, but I'll leave it as a bull channel for now. So far today, prices have penetrated the mauve medium moving average below once again, but pulled back up also over it and up towards the congestion at 126.72. Euro sterling. An indecisive spinning top pattern on Friday that was also a bearish dark cloud cover pattern. The market continues to be capped by the April 2021 low at 84.70. Overall, from early May until 2 weeks ago, prices had formed a large bearish halfway hesitation, with potential down to 84.30. Now, this potential was achieved. Additionally, I'd previously pointed out how both the primary and secondary targets had been achieved on the downside for the break below the purple highlighted lower trend line, currently at 85.55, of the late January to late May expanding wedge pattern. So far today, an attempted move higher, up to test the April 2021 low. Beyond this, we have congestion from late May to early June that formed the recent bearish halfway hesitation. That's been roughly between 85 even to 85 and a quarter. US dollar against the Japanese yen. A third consecutive bullish closing white Mariposa yesterday. It was also now a seventh bullish white soldier. Remarkably, it was another test, the highest close since 1990. Though obviously not the highest high. This significant move up punched through and closed over for a second time, consecutive time even, the important bright red middle time, currently at 158.48, of the July to December 2023 bullish Andrews pitchfork. Topside, we are entering the start of a significant congestion zone, area, let's say, between 159.61 to 160.34, and it starts with the May 1990 high at 159.61 and includes this year's high at 160.03 and the April 1990 high at 160.34. So far today, well, a slightly higher open, but a rejection of the overhead 2024 high at 160.03. But not enough of a rejection to push down below the base of the congestion at the May 1990 high at 159.61, not yet at least. US dollar against the CNH, the offshore Chinese yuan. An indecisive doji cross on Friday, after what was in the previous session the highest high and highest close since mid-November 2023. I continue to wonder if it seems a long suspected rise in this market is finally happening, though it's remarkably slow in moving that way. Below, we now have previously mentioned congestion zone between 724 to 727, within which sits the rising short medium moving average, currently 725.23, and a dark blue highlighted upper trendline extension to the January to April ascending triangle, currently 724.13. Looking topside, well, the next topside resistance of note is the mid-November 2023 high at 731.06, which ties in with some earlier congestion in the 731 even area. As a side note, I'm very tempted to look at the action since mid-March today as a possible reverse head and shoulder bottom pattern type. But for now, I am resisting that temptation, but I still may give in eventually. So far today, well, in a small attempt higher, but then a significant pullback down enough to possibly make today a possible key reversal down to see how it closes tonight. US dollar against the Mexican peso. A bearish long black Mariposa on Friday was a second bearish black crow and a suitable follow-on lower to the previous session's bearish engulfing pattern. The cap on the market, however reeled with holes it might seem to be, is still the dark blue upper time, currently at 1878.44 of the early April to mid-May bullish Andrews pitchfork. Now this had been previously aided by the February 2020 lower, 1851.71, but they have now separated. Looking below, we have the rapidly ascending middle time, currently at 1730.65 of the same early April mid-May bullish Andrews pitchfork. It's time now to see and consider what the next pattern will be. For this, I would like to put the following idea in front of you. We have the possibility of looking at the action from 2022 to date as potentially a huge double bottom pattern idea. We are now, after the rise during May and now into June, even after the recent falls, relatively close to the neckline area in the big scheme of things of around the February 2020 lower 1851.71. As this is something I saw on my monthly charts, I would appreciate at the very least monthly closes, consecutive monthly closes over this level to confirm such a long-term potential higher move. Thus, with a week and less than a week to go now until the end of June, let's keep an eye on where the prices close on the 28th of June. Finally, there is a golden cross, which is a lagging indicator. A golden cross of the rising short medium moving average, currently 1725.39, up over the slower rising long moving average, currently 1723.39. So far today, a further decline, but halted by the middle time in blue that you can see there, but for now only.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.